Good morning, everyone, and welcome to this last Fox Williams webinar for 2022. And in this session, we're going to be looking at the legal and regulatory developments coming along in 2023, which we think that every travel company should know about. My name is Rhys Griffiths. I'm a partner and the head of the travel team at Fox Williams, and I'm joined today by Lucy England, who's a partner in the travel team, and Jessica Howard, who's an associate in the travel team. The plan today is for us to speak for about 30 to 40 minutes on the key sort of regulatory developments for next year, to leave some time at the end for questions. If we don't have any questions, that's fine, we'll finish early. If we do have questions and we run up to the hour, we will guillotine at 10 o'clock so that everyone can go and do their day job. A few housekeeping matters before we begin. Firstly, although this is a webinar, all of your cameras are switched off and cannot be switched on, so you don't need to worry about being able to be seen. We are recording this session, and we will make the slides and the recording available on email after this session. It is possible for people to post questions, and feel free to post them as we go along. There's a Q&A button that you can click on to type in your questions, and I should say that we will read out questions anonymously. So feel free to ask anything you want on the topics raised today. So I think that's it by way of introduction. As I said, we're going to cover what we see as being the key sort of legal developments for 2023. We're going to be covering ATOL reform, package travel reform, changes to the enforcement regime in the UK, and then we're going to be looking at passenger rights, so the consultations going on at the UK level with Regulation 261 and also at the European level. Those are going to be the main topics, and we're going to aim to spend about 5 minutes each on those, telling you what's going on, what you need to know about, and what's likely to happen next year. And then we're going to have a 1 minute catch up on a bunch of other things which are happening. Not necessarily travel related, perhaps more in the financial services space or tax and those sorts of spaces, but what we again think are going to be really important and potentially quite significant for the travel industry. So we will just spend about 1 minute each on a bunch of those topics to tell you what's happening. So that's it from me by way of introduction. Eva, if we could have the next slide, please, and then I'll hand you on to Jessica.
Thanks, Rhys. So as Rhys mentioned, I'll be talking about ATOL reform, and there's a lot to cover, so it's going to be a bit of a whistle-stop tour. So just by way of background, the CAA opened a consultation in April 2021, and the main objective was to consider moving to a regulatory framework that improves ATOL holders' financial resilience, which in turn will reduce the risk that individual ATOL holders pose to consumers. And the consultation sought to highlight two key problems. Firstly, that many travel businesses are highly reliant on customer money as a source of funding for other business expenditure. And secondly, that the ATOL protection contribution, or the APC, is not currently reflective of the risk that individual ATOL holders pose or reflective of the value of bookings. And the CAA also took this opportunity to consult on a number of other changes, which I will mention briefly. Next slide, please, Eva. So the first proposal, the CAA is considering whether to mandate a single form of insolvency protection, which all ATOL holders must provide. And as you can see from the slide, the two options considered are the segregation of consumer monies and bonds. So starting with segregation of consumer monies, under this proposal, ATOL holders would be required to segregate funds, either full or partially, from their operational cash balances until the consumer has completed the holiday. So this means that ATOL holders would be required to seek further means of funding their operations. And the CAA is considering 3 options for segregation: trust account, escrow account, and customer monies account. And I don't have time at the moment to go into these in detail, but I will just flag that unlike trust account and escrow account, customer monies account do not have inbuilt financial protection of the funds. So there are no trustees and there are no conditions that need to be met before the money can be removed. Moving on to mandatory bonds, under this option, ATOL holders would provide a bond in favour of the air travel trust that would be called upon in the event of the ATOL holders' failure. The next approach is the tailored approach, which is where ATOL holders could be given the flexibility to choose between different forms of insolvency protection as long as they achieve the required level of protection. So this could be a combination of a trust account and a bond, for example. In terms of changes to the APC, as I'm sure you're all aware, the current cost of the APC is £2.50 per passenger. And one proposal is that the CAA would increase this flat rate and apply the new rate to all ATOL holders. However, this would still fail to take into account the risk of failure of individual ATOL holders and the value of bookings. So the second option would be to change to a variable rate. And there are 3 ways that this variable rate could be calculated. So firstly, it's pretty self-explanatory, but it would be a risk-priced APC, which would take account of the risk profile of the ATOL holder. Secondly, a value-priced APC, which would seek to reflect the increased cost that higher value bookings pose to consumers. And then finally, a hybrid model, which would be a combination of the risk and value-priced models. And just to finish up on this slide, in terms of the financial markets option, under this option, the ATOL holder would be required to obtain full ATOL equivalent consumer protection from third-party insurance providers. And it would be that the institution providing this financial protection that would be responsible for determining the financial criteria that would apply to the ATOL holder. Next slide, please. So I'm just going to canter through some of the other points from the consultation. So currently, there is no requirement for when customer monies held by an agent on behalf of an ATOL holder need to be passed on to the ATOL holder, which ultimately presents a risk to both the ATOL holder and to the consumer if the agent becomes insolvent. So the CAA is considering whether there should be some control over when the agent must remit the pipeline monies to the ATOL holder, or whether the agent should be required to segregate these customer monies. The second consideration is in terms of agency agreements. So the CAA proposes to simplify the way in which changes to mandatory agency terms are incorporated into agreements between ATOL holders and their agents. So at the moment, under agency term 11, ATOL holders have 3 months from the date of publication to incorporate the new terms into agency agreements. So this proposal would mean that any future changes would be immediately incorporated into the agency agreements between ATOL holder and the agents. In terms of APC reporting, the CAA is consulting on changes to APC returns for those who hold small business ATOLs and certain franchised ATOL holders. And the intention is to bring these in line with the APC returns submitted by standard ATOL holders to ensure consistent reporting, which should hopefully make life easier. And then the final point on this slide is the proposal to introduce online ATOL certificates and to change the way that ATOL certificates are being issued. So currently, ATOL certificates are issued by the ATOL holder or by the agent. And under this proposal, certificates would be issued by the CAA based on data provided to the CAA by the ATOL holder or the agent. And the full scheme is still to be developed and no timeline has been given for implementation. Next slide, please. So this is just a very high-level summary of the responses to the consultation, and it will focus on the 4 main proposals in the first slide as opposed to the other considerations. So there was a wide range of views on the best option, but the general consensus amongst the respondents was that a change in some form was definitely necessary. Most respondents preferred the tailored approach, whereby the ATOL holders had the choice of the form of financial security they used in order to suit their business model. And interestingly, a significant number of respondents that favoured the Taylor approach didn't particularly agree with either measure, but agreed with the principle of allowing the ATOL holder to have the flexibility to choose. In terms of the APC, there was a general consensus that the variable APC would likely yield a fairer system, so less risky businesses would not be subsidizing riskier businesses. And in terms of calculating the APC, the hybrid model, which is the mix of the value and the risk criteria, received the most support. And the majority of respondents did not favour the financial markets model, and most expressed concern over the limited availability of insurance products for travel companies and the concern of the likelihood of insurers paying out. And then just in terms of what we can expect next year and coming up, so the CAA are expected to publish another consultation before finalising the regulatory changes. And this would set out the chosen framework in further detail and the way that the APC would be calculated, in addition to other relevant changes that I've mentioned. And ultimately, they would provide an opportunity for the industry to comment. And there is likely to be a transition period. However, the duration of this will be decided once the CAA determines which framework will be put in place. And it's important to just flag that although we have definitely seen an increase in the move to trust accounts, the CAA have stressed that current licensing conditions will be dealt with consistently under the current framework and not under the suggestions in the proposed consultation. That's ATOL reform. Now I will cover package travel reform, and I will be talking about UK reform. Next slide, please, Eva. As I'm sure you're all aware, the PTRs came into force in 2018, and the government committed to a review of the PTRs in 2019 following the end of the 6-month transition period. We then had the consultation on reforming competition and consumer policy in 2021, and the response to the consultation was published in 2022. The Queen's speech also referenced that regulations for package travel would be updated and simplified. And earlier this year, the government carried out a mini review which highlighted several proposals for consultation in package travel. And a further consultation next year is expected. So I just wanted to mention that a review of the PTRs is running alongside a separate EU review of the Package Travel Directive, which Rhys will talk about next. And following Brexit, the UK no longer needs to implement the Package Travel Directive, and therefore the impact of these reviews may ultimately be that the UK and the EU diverge more significantly in terms of the way that package travel is regulated in the future. Next slide, please. So the first 4 points listed on the slide have been identified as areas of reform. However, as I'm sure some of you might agree, the proposals don't seem to be wholesale changes, but rather smaller improvements and simplifications. So firstly, the dreaded 3 words of linked travel arrangement. So just by way of a quick reminder, LTAs are a sale of 2 or more different travel services purchased in one of 2 different ways. So an LTA 1 involves a single visit to a website or shop where a separate selection and separate payment is made for each travel service. An LTA 2 is after the first travel service is purchased, the traveller is then cross-sold a travel service provided by another trader. For example, a link in a booking confirmation that would allow you to book car hire. And this is in a targeted manner, and the second booking must be within 24 hours of the first booking. And feedback has consistently been that LTAs are confusing, that they're rarely used, and that they're challenging to enforce. And although opinion was divided on what the scope of the LTA should be, there was a general consensus that they need to be simplified. In terms of the second point, it's important to understand what could amount to another tourist service, because if a travel company sells one service and then decides to start including extras, it needs to assess whether these extras would be considered a tourist service, and then ultimately they might be selling a package. So unfortunately, tourist services are not defined in the PTRs, but we know that they are services which are not intrinsically part of the other travel services already included in the package. And there are 2 ways to assess whether something is a tourist service. Firstly, if they account for a significant proportion of the total value of the travel services. And secondly, if they represent or are advertised as an essential feature of the holiday. And it's hard to know what essential and significant proportion mean. So the EU Package Travel Directive states that if the other tourist service accounts for 25% or more of the value, then it should be indicative that it's a significant proportion. However, this is contained in a recital to the EU Package Travel Directive and is not reflected in the PTRs. So people have called for clarification on this definition. The third area for reform is that the government plans to improve flexibility of the insolvency protection of the PTRs, and we suspect that this will allow a greater element of mix and match, so package organisers can use multiple methods to protect consumer monies. There's also a consensus that regulations are too complex and there's a low level of consumer understanding, so BEIS will be provided with a mechanism to make changes to the information requirements contained in the schedules in the PTRs. And then finally, so these are the four main areas of reform, but as you can see, the review is quite limited, and we are expecting to see a consultation in 2023, which may include more ambitious proposals, for example, considering whether domestic packages can be reformed to enable a more proportionate approach and encourage more services. So ultimately, this is just a space to watch. And I'll now hand over to Rhys, who will discuss the proposed EU reform of the Package Travel Directive.
Thanks very much, Jess. Yeah, so in parallel to what Jess has been talking about at the UK level, the European Union are also looking at reforming the Package Travel Directive. Now, this is going to be relevant to all travel companies, not just those based in the EU, which provided that the travel companies sell to markets in the EU. So if you're selling package holidays to customers in France or Germany, then this is going to be of interest to you because the rules are going to be changing. And as Jess said, we're probably going to end up in a situation where we're going to have different versions of the package travel directive in the UK and in the EU. Now, what's happening in the EU is a complete root and branch review of the package travel directive. It's not just as the UK have been doing, looking at very narrow areas of the regulations. The EU is being much more ambitious and looking at the whole thing. And they're particularly picking up on lessons learned from the failure of Thomas Cook, which was a huge event in the travel industry in Europe, despite it being overshadowed then by COVID. So those are the two big lessons that the lawmakers have been looking at to see ways in which the directive could be improved. The consultation is very broad, it's very long, but just picking out some of the aspects of it that I found interesting, the Commission has been looking at the obligations of travel suppliers to pay refunds. What I mean by that is, the airlines and the hoteliers and the obligations that they have to pay refunds. We have this situation at the moment, which was brought into sharp focus by the pandemic, that where a package is cancelled, the obligation to refund the customer sits on the package organizer. Even if, let's say, that the flight has been cancelled, the customer doesn't have a right under EU Regulation 261 to claim a refund from the airline. That the customer must go to the package organizer to get the refund. There are then mechanisms in the PTRs for the customer for the package organizer to be able to claim back money from the supplier, but they're not particularly well defined. So the European Union is looking at whether they should do something about that. For instance, putting an obligation on, let's say, the airlines to pay money for cancelled bookings back to the package organizer, so that the package organizer can then comply with its duty to refund customers within 14 days. So that's an area which has been a real battleground, to be honest, with obviously very strong lobbying groups on both sides of that argument, asking for changes to be made. But it's going to be interesting to see how that one develops. But I'd say that that's one of the key aspects that most package organizers will be looking at. The other thing which I think is possibly less controversial and certainly in need of reform is around vouchers. And we obviously saw during the pandemic a lot of travel companies issuing vouchers, or as they were known in the UK, refund credit notes to customers instead of a cash refund. Now, I think um, the European Commission is certainly looking at this, and it's certainly looking at recognizing the use of these vouchers in some way. And I would think then to regulate the way that vouchers are used, specifically around making sure that they are presented as an option for the customer, um, as alongside a cash refund, because obviously what was happening during that pandemic was many holiday companies squeezed for cash, were just issuing vouchers without asking customers whether they would prefer a cash refund, as they were entitled to under the package travel directive. So I think that's possibly an area where we will see some reform, and also in addition to sort of regulating the issuance and the use of vouchers, what may happen is a requirement for these vouchers to be protected, so insolvency protection for the vouchers. And there's varying views about whether these vouchers are already protected. So I suspect we will potentially see some clarification around that. I think the third thing I just want to mention before moving on is another area that the European Commission are looking at is whether to sort of formally recognise the relevance of FCDO advice as triggering customers' rights to a full refund. So at the moment, the way the PTD works, the way the PTRs work, is that they use this concept of unavoidable and extraordinary circumstances to give the customer a right to not travel and to demand a full refund from the package organizer. And there's no reference in any of the laws to government advice like the FCDO, although it's obviously used as a yardstick by many people, many trade associations, particularly ABTA in the UK. So it's possible, I mean, it remains to be seen, but it's certainly an area that the European Commission are looking at, is whether to formally require travel companies to refund customers or offer full refunds to customers where some official government advice advises against travel to the holiday destination. So those are just some of the things that I thought were interesting. Looking at the consultation, the public consultation actually closed earlier this year, in May, and since then the lawmakers have been looking at they've been looking at all of the feedback, all of the responses, and we're expecting to receive a proposal from the European Commission as to how it's going to change the package travel directive in Q2 of next year. So that's where we are. I mean, in terms of recent developments of rumours and concerns, I've mentioned here ECTA. Now, this is the European Travel Agent and Tour Operators Association, issued a press release, I think a couple of weeks back, noting that their understanding is that the Commission intends to introduce laws to limit the prepayments that holiday companies can take. So that would be introducing a maximum amount of deposit or cash that the travel company can take from the customer before departure, as we have in Germany, effectively at the moment, just rolling that out as a rule for all member states across the EU. Now that would obviously be very controversial, particularly for holiday companies, if similar requirements aren't imposed on the airlines or other suppliers. So that's a very contentious area where ECTA have been very robust in issuing press releases on that. So it remains to be seen, but that's potentially an area of real concern for travel companies. Next slide, please, Eva. And next slide again. So so that's package travel. The next thing I want to talk about, which is happening next year, is a real significant development on the way that consumer protection laws are enforced in the UK. To my mind, this is, I mean, we're talking about changes to particular laws which are happening next year, but to my mind, this is probably going to be the most significant change in consumer law and compliance with consumer law in the UK next year, because it's going to significantly up the ante in terms of potential consequences for non-compliance with consumer law, and it's going to give the regulators, powerful tools that they didn't have previously to force travel companies to comply with consumer laws. I think that the general intention is to try to raise the appetite for compliance to the same level as data protection, where we all read about significant fines that the Information Commissioner can impose, and similarly breaches of competition law, where the regulators can impose turnover-based fines on companies. So the background is a desire for consumer law to be sort of raised to that same level of compliance. And when I refer to consumer law, what I mean is, it's convenient to look at consumer law in the travel space in two ways. You've got your general consumer law, which are laws which apply to the fairness of contract terms with consumers. So there's obviously an obligation under the Consumer Rights Act for terms and conditions to be fair. There are separate regulations dealing with the way that travel services are advertised and marketed to consumers, and they have to be clear, not misleading, not omit any relevant information. And then we've got separate laws which deal with pre-contractual information, so pre-booking information that has to be given to consumers as well. So that's the general consumer law, and then we have the specialist consumer law, which relates specifically to travel, such as the package travel regulations, ATOL regulations, and Regulation 261. Next slide, please, Eva. Now, that consumer law at the moment is enforced in the UK in the following way. In terms of enforcement by the regulators have two main tools that they can use at the moment. They have civil enforcement powers. And what I mean by this is they can bring a claim in the civil courts, and they can seek remedies to force companies to do things or not to do things. So we saw this particular power being used during the pandemic against certain travel companies, where the CMA took travel companies to court or started the civil enforcement action in order to force travel companies to pay refunds. So in addition to those civil enforcement powers, they also have criminal enforcement powers. It's very rare that you see a regulator use these powers, but they do have the power because a breach of the package travel regulations, the ATOL regulations, can be a criminal offence. And the regulators do have powers to bring criminal proceedings against those breaching the regulations. But like I said, it's extremely rare to see those powers being used. It's much more common to see the civil enforcement powers being used. The one gap which these new developments are looking to fill is that the regulators don't currently have the power to impose fines on travel companies for non-compliance. So we see, I mentioned the Information Commissioner earlier, they have powers to impose what's known as administrative fines. So they can decide whether there's been a breach of the relevant regulations and impose a fine. And in the travel space, the regulators don't currently have those powers, and that's the gap that this new regulation is looking to fill. Just very briefly, in terms of enforcement, it's also possible for there to be representative actions or class actions in the UK to enforce consumer law. Obviously, consumers themselves can bring claims in their own names for some form of redress or compensation to get refunds, etc. Next slide, please, Eva. So the new powers which are coming next year, we are waiting for the bill to be published in Parliament, and the autumn statement, which was released in the middle of November by the government, did indicate that this was on its way. So we are waiting for the draft legislation to be published imminently. And the consultations which have led up to this have indicated that the way that the new laws are going to work is as follows. So for the CMA, that's the Competition and Markets Authority, they're going to be given the powers to determine for themselves whether consumer law has been breached. So unlike at present, where if the CMA suspects there's been a breach of consumer law, they have to take travel companies to court. That's going to change, so the CMA can just decide for itself whether there's been a breach of consumer law. The CMA will then be given the powers to again decide for itself what the consequences of that should be for the travel company. So the CMA will be able to, for instance, order the travel company to compensate consumers affected by the breach, to change certain working practices, or to provide other forms of redress to the customer. In addition to that, I mentioned earlier that the CMA are going to be given powers to impose fines, and these fines are meant to really encourage, act as a deterrent and encourage travel companies to comply with consumer law. So the fines could be for a breach of consumer law could be anywhere up to 10% of the global turnover of the travel company. I mean that's the top end of how these fines are going to work. So that's obviously very significant, and I'm sure that we are going to see particularly some of the larger travel companies be made an example of, as we see with data protection breaches, and the regulator then trying to encourage greater compliance within the travel industry by perhaps picking on one or two easy wins in the early days. It remains to be seen what powers the CAA are going to have. The consultation suggested that the CAA will be able to go to court and seek a fine of up to 10% of global turnover, and have all of these other powers. But the main difference with the CMA seems to be that the CAA won't have the power to decide for itself whether there's been a breach of consumer law, and then to impose these fines, it's going to have to go to court to get those remedies. Next slide, please, Eva. So that's it on the consumer enforcement aspect from me. I'm going to hand over to Lucy to talk about Regulation 261.
Thanks, Reese. Morning, everybody. So yes, I'm going to cover more air-related and aviation-related UK and EU reforms, which you'll see talk to and dovetail with what Reese has just covered. Reese and Jess have just covered on package travel and general consumer law. There's a lot of consultations happening all at the same time. They don't necessarily talk to each other, I don't think. So we hope the output will be connected, but I think time will tell. So first of all, slide please, Eva. There's been a consultation in the UK, and the other thing you'll notice is the UK and the EU consultations don't necessarily go in time with each other, not surprisingly, but there is a, when one does something, the other one also does something. And the UK is obviously using Brexit as a good reason to start looking at its own law book. And does it work for the UK now that we don't have to comply with the EU like we used to? So there is, this year, there's been a consultation from the UK Department for Transport looking at aviation consumer policies, like I say, purely aviation, and it's linked to a bigger consultation that the government put out 4 years ago. So it's a sort of slow burn, and it may have speeded up had we not have had the last couple of years of pandemic, but it's another piece of the puzzle. And it's looking at Regulation 261 plus some other things. For those of you that don't know, Regulation 261 is the regulation that gives you compensation if you're either not allowed on the denied boarding, if they've overbooked and you get told you're being bumped off, or if your flight is cancelled, or if you're delayed. It's usually delays that people know it for. Why is it happening? Why is there a consultation? It's to make sure that passengers are being protected. It is a consumer protection regulation, but also to make sure that consumers know what their rights are, so that the rights are there in the first place. But there is a concern that consumers aren't aware of what they can claim if they are cancelled or delayed. But it's also, this opportunity to review legislation to make sure the UK remains competitive. That's one, obviously a big thing. So what is the consultation looking at? Well, the big thing is what the compensation levels would be. And it's important to remember that this is just about domestic UK flights at the moment, because EU 261 is different and separate now. Anything we do in the UK won't impact flights that land or come from the EU. So it's got quite a small footprint. If you think about the UK domestic aviation market, it's not huge. But the proposal is that the compensation regime is changed. At the moment, depending on the length of your delay and depending on how far you're travelling, you're given a set amount of compensation. In the UK, it's in pounds. In the EU, it's in euros. So it's anything from £220 up to 520, so depending on how far you're travelling. The proposal is that those set fares are removed and it's changed to become a percentage of the ticket price. Airlines have been on about this for a long time. For a £20 seat, they might be paying €250, £220 in compensation. They've always been disproportionate for the low-cost carriers, certainly. So there's a suggestion that it's linked to ticket price, and I put on the slide what those are, depending on the length of delay, and the idea is that it's brought more in line with rail and maritime in the UK. So if you've travelled on a UK train recently, you may have seen posters about how your entitlement to a refund. It's about making it clearer and making it an easier opportunity to get your refund, but for the refund to be linked to the price of your ticket. So that's kind of, I guess, the biggest thing in this consultation. The other, one of the other things that the consultation is looking at is something that Rhys mentioned on the package travel side, which is asking whether there needs to be clarification about the right of a package travel organizer to claim a refund from an airline when a flight is cancelled, and that has the knock-on impact on the package. Does an organizer need a specific right to reclaim from the airline on behalf of the consumer or on its own behalf? Now, as Rhys said, there's a question. There is something in the PTDs that covers this, but it's not particularly well used or perhaps well known. So maybe it's a good idea that they are bringing this to light. As Rhys said, it's been a real battleground over the last few years. So clarification is probably going to be welcome, certainly from the travel industry, if not from the airline industry. Next slide, please, Eva. So, and a couple of other points in the consultation. Rees talked about the enforcement powers that the CMA, the Consumer and Markets Authority, might be given under the other consultation. This consultation is looking purely at the CAA's enforcement rights and whether they should be given similar rights to the CMA for more general consumer law. And that is that they could determine that an airline has breached consumer law and could impose fines, again, up to 10% of global turnover, because the CAA doesn't have many teeth at the moment when it comes to enforcement. It's drawn out, and it's not as punchy as the CAA would like it to be. And in the CAA's response to this consultation, it said as much. It wants a quicker regime. It wants to be able to have an impact that will actually deter non-compliance with the airlines that don't comply when they try and do it in the way that they do now. So hopefully the consultation responses will hopefully speak to each other as to what powers the CAA have and what the CMA have, but again, we will wait to see. A couple of the other things that are in this consultation, they are looking at whether the CAA should have other enforcement tools. They don't necessarily go into much detail about what they might be, but the consultation is to see if anybody has ideas on what the CAA may want, what enforcement powers the CAA should have. It also looks at whether alternative dispute resolution for consumers is mandatory. At the moment, about 80% of airlines are members of an ADR body, so consumers have an easier right of redress if they have an issue. There's about 20% of airlines that don't form part of an ADR scheme. So should that become mandatory for all airlines, so consumers have an easier way to make a claim. And there's also a consultation about improving accessibility for passengers with reduced mobility, wheelchairs on board, the extra costs associated with that, and looking at how that could be improved as well. So it covers quite a lot, like I say, all in the airspace, but it obviously links to travel. The consultation ran earlier this year. It closed at the end of March. There hasn't actually been anything since, other than the publication of the CAA's response. Hopefully we'll see something at the beginning of next year, but we don't know yet. So we'll obviously keep you updated when we hear something else. I think, yeah, the biggest thing that why this is relevant to this audience is just mostly the interplay with the refund issue. And if, you know, for Regulation 261 is changed, UK Regulation 261, there's the compensation side of it, but it's more important, I think, about the reclaiming refunds, whether it's on behalf of consumers or on your own behalf, if there's a knock-on effect to the package that you've organised. Next slide, please. So that's the the UK consultation. The EU equivalent, next slide please, Eva, is in a similar vein, if you like. It's again it's not just air here. They're looking at all modes of transport, so train, sea, and air. The rationale, again, there's a normal review of legislation every 3 or 5 years, so it's partly good practice, but also Regulation 261 came into force in 2004, so it's getting quite old. Is it still fit for purpose? Does it need changing? But there's also, coming out of COVID, is it suitable? Is the framework suitable for extensive travel disruptions, volcanic ash disruptions, things like Monarch, Thomas Cook? There's always something that it will apply to. So is it still fit for purpose in today's modern age? It also looks at what's called multimodal tickets, so a mixture of air, sea, train, of passenger getting from A to B. But it also interestingly looks at whether there should be a financial protection scheme for consumers if an airline goes insolvent, basically. A bit like what the UK looked at a couple of years ago with the airline insolvency review, which now seems to have died a death in the UK, but the EU is considering something similar and is out to consultation at the moment. So what does the consultation's looking at? It's a list of questions which they ask people to respond to. A lot of it is about whether respondents think passengers are suitably financially protected, and whether they can be repatriated if there was an issue whilst a passenger was abroad. And there's a lot of questions about the interplay with intermediaries as well, so agents, booking platforms, the refund obligations between the two. Next slide, please, Eva. I'll skip on because I'm conscious of time. It's currently in consultation. The final day is tomorrow, so if anybody wants to respond, you're still in time. And the idea is that it will lead to a new regulation, and the proposal is expected to be adopted in Q1 next year. So that's not the law, but the proposal, which then goes into the EU and is discussed. So there should be something in very short shrift in the new year. And again, the interest is this, the refund point, which is the same issue between travel agents and airlines. So that's all I'll say on that. I'll hand back to Rhys.
Thanks, Lucy. Next slide, please, Eva. Next slide again. So before we finish, we're looking forward to 2023 and things that are happening. I mean, there are other things happening which aren't necessarily changes to travel regs, but they are changes to other laws which we think will impact travel companies and will be of interest to our clients. So the idea here is that we're just going to give you a very quick, hopefully 1-minute summary on each, so that you know what's coming in relation to each of these topics. So I think Lucy's going to start off.
I am, thank you. So yes, I'll take the top three. The Digital Services Act and Digital Markets Act have been talked about for the last couple of years. They're now in force. They came into force in November, so they apply across all member states. There's an implementation period which will go into next year and some of 2024, depending on the size of businesses, but they are in place now. The idea, they're a twin set of rules, if you like, and the idea is to make a safer digital space for consumers. Again, it's consumer protection regulation, but also to establish a level playing field amongst the big digital players. The DMA is aimed at the big players, so the Facebooks, the Googles of this world, but in the travel space, the likes of Booking and Airbnb are impacted by the DMA. That talks about gatekeepers, being gatekeepers to a lot of other things, whether it be accommodation or things that you want to buy. And so it puts obligations on those gatekeepers to make sure consumers know what they're doing, kept safe, etc., etc. But the Digital Services Act is probably going to be more of interest or perhaps more practical than the DMA for this audience. The DSA impacts any businesses that use online platforms. So if you use an intermediary to offer your travel products for sale, or if you are an intermediary yourself and you're connecting businesses and consumers, the DSA applies to you, assuming you're selling into the EU or targeting the EU. And it puts obligations on things relating to data, making sure data is accessible to businesses about their end users going through the intermediary, knowing how content is reviewed. So when you use a platform, you're a bit blind to what's happening the other side of it. This is intended to make sure business users have a bit more access to the end data. Marketplaces, the intermediaries themselves have to now do a bit more know your business customer research, if you like, onboarding, to make sure not anyone can come on, and to make sure they're legitimate and there's nothing illegal going on behind the scenes. And there's a bit on advertising. So if you advertise or have adverts on your platforms, making sure users know that it's an advert, why they're being targeted, whether they're being profiled. It's all about the user experience, making sure users are not blindsided by adverts. There are again large fines for non-compliance, up to 6% of annual income or turnover of the intermediary, so not insignificant if you're found to breach. So that will, I think you'll start to see things coming out of platforms in the sense of terms and conditions and what you see visually when you're advertising on those platforms. And then just very quickly, the EU Data Act. This is a newer one. You'll see the theme from the EU is all about data, and this isn't personal data. This is what I term operational, non-personal data. So knowing how people use platforms to give you a better competitive advantage to have if you have that data. Data isn't generally shared. There's a lot of proprietary issues relating to data, and so the Data Act, the idea is that there should be more sharing of data to make it a better, a more even playing field. So in this arena, will tour operators or travel agents and airlines be forced to share data on passenger numbers, for example? Booking data, things like that. There's a chance that you could be forced to share that information, or airlines the other way. So there's more of a playing field. It's been quiet since February this year, but a new report's expected at the beginning of next year. And I think this one won't go away. This will go somewhere. So we'll again keep you posted on what it actually means for you.
Thanks, Lucy. So me next on new reform of TOMs and taxation of platforms. Now, I don't profess to be a tax expert, but I think anyone involved in the travel industry, particularly selling European accommodation or selling into Europe, probably needs to know about this. And I should credit what I'm about to say to the European Tourism Association, which has been producing fantastic webinars and information about these developments. And it seems that there are two very significant sort of taxation developments on the way. Firstly, in relation to the taxation of platforms, the European Commission's looking at changing the rules on how online booking platforms are taxed. So they are looking to introduce what's known as a deemed supplier regime, where effectively, if suppliers kind of selling their travel services on a booking platform don't themselves pay VAT on those sales, then it may be possible, or it will become possible under the deemed supplier regime, for the online booking platform to have to pay tax on the full value of the travel service. So this is clearly going to be of interest to any booking platforms selling travel in the EU. And as I understand it, the next steps are that we're expecting proposals. There having been the usual consultations, but we're expecting proposals from the European Commission and next steps this month. So that's something to keep an eye on. And see, the other big tax issue happening in the EU is their root and branch review of the TOMS VAT system, which had been going on a long time. And there have been reports and interim reports. We're expecting a final report, I think during the early part of next year. But a couple of the areas which interest me in this regard are, firstly, they're looking at where the tax has to be paid for TOM supplies, and that's quite interesting because they're looking at whether it should be changed from where the supplier is based, which means that non-EU suppliers, non-EU companies aren't caught, and maybe changing that to where the customer is based or where the holiday takes place. So that has the potential to significantly change and impact travel companies selling package holidays into Europe. The other aspect of it, which is quite interesting as well, before I move on, is around they're looking at defining and when travel companies should be considered to be acting as a principal, when they're considered to be acting as an agent. And this has obviously been the subject to significant litigation in the UK. We have the decision of the Supreme Court in Med Hotels, but the European Commission are looking at perhaps introducing some what they call presumptive behaviours. So if you're doing these sorts of things, you are likely to be acting as a principal as opposed to an agent. So that could obviously be very significant against travel companies selling into the EU markets. The other thing which has happened quite recently is the European Union have published a proposal for regulating the short-term letting industry. So this is obviously directed to the likes of Airbnb, where you have short-term lets made available by hosts to guests through a platform. And the European Union have published a proposal to start to regulate that. At the moment, the proposal is, I would say, quite limited in scope. And what they're looking at doing is simplify in relation to the hosts themselves, so the people who make available short-term lets through an online platform. They're looking at simplifying their registration requirements. So often cities or regions or member states require hosts to register the facts that they're providing short-term lets and provide information in relation to that particular let. And the rules in this space are just not harmonized across the European Union. You can have different rules in different cities, etc. So the European Union are looking to sort of simplify and harmonize that to make it much easier, much more standardized, so make it much easier for hosts to register and report on their lets. And they're also looking, the Commission's also looking at standardizing the way that member states then verify the information that the host provides, and the action that they can take if that information is incorrect or incomplete. So that's what they're looking to do on the host side. On the platform side, the Commission's looking at imposing obligations on platforms to effectively require their hosts, where they have registered, to provide details of that registration on the platform, and also to carry out spot checks on hosts to make sure that they're providing correct information about their registration. There's also proposals for the platform to report information on those registered hosts to a central contact point, and therefore making it much easier for the platforms, instead of having to provide reports and information to a bunch of different regulators across Europe, to try to simplify that for the platforms as well. So the proposal has come out very recently. It's beginning to work its way through the European machinery, and we're expecting this to then take shape and become law potentially at some point during late 2023. So that's it on the European side of things. On the UK side of things, hand in hand with the new enforcement powers, which are due to be published very soon in the UK, there are also some other sort of legal changes being made in the Digital Markets Competition and Consumer Bill, which, as we understand it, are likely to tackle subscriptions. So this isn't particularly prevalent in the travel industry, but it's becoming more common to have some form of subscription model. And the government is looking to introduce rules to well, what they call tackle subscription traps. So to make it easier for customers to end subscriptions, to avoid automatic roll-on of subscription contracts, and to make it easier for the customer to know that they're about to enter into a further contract, or that some free period is about to end, so that they can exercise their option to bring that subscription to an end. So there's changes being made there. There's also likely to be changes made to tackle the industry of fake online reviews in this new law, and effectively making it illegal to commission or incentivize somebody to publish fake reviews about you. And they're also looking at making it illegal to host reviews without carrying out some checks to make sure that they're genuine reviews. So that's it on those consumer law changes. On the appointed representative regime, some of you may have joined the talk that our financial services team gave last week about this, and the changes which are coming in on the 8th of December to the appointed representative regime. And this is going to be of relevance to any travel company selling travel insurance as an appointed representative for a principal. And what's happening is that the government is looking to tighten up the rules around appointed representatives, requiring principals to be much more diligent in checking what their appointed representatives are up to, and also reporting more information to the FCA about their appointed representatives. So I should think that travel companies acting in this way are likely to find it much more rigorous a process now when they renew or apply to become an appointed representative, and they'll have to provide much more information to their principals. We have run a minute over, so I'll be very quick on these two things. UK reform of buy now, pay later. The Treasury last year carried out a consultation on the buy now, pay later industry, and looking at two aspects of it. Looking at those that are in the business of providing buy now, pay later finance, such as your Klarnas, but also, and I think of real relevance to travel companies, is looking at merchants like travel companies, which offer some form of short-term credits to their customers. So in the travel company, for travel companies, this could obviously cover situations where travel companies sell a holiday and offer their customers the opportunity to pay it off over a period of time, to pay by installments or something like that. Now, the government's looking at all of that, and it's looking at whether to make changes to the exemption from the consumer credit regime, which many travel companies currently rely upon when they're making available these pay by installment options. I mean, it's possible to structure the proposition in a number of different ways, but some travel companies rely upon this installment exemption, and the government is looking at that and whether they should tighten up or remove it for some of these online short-term credit options offered by any merchants, including travel companies. I asked the Treasury last month what were the next steps and when we were expecting the draft legislation on that, and they said soon. so that could be any day now, where we should get the draft regulations for that. Jess, do you just want to mention the Brexit freedoms thing very quickly?
Yes, I will try and stick to a minute. So the Brexit Freedoms Bill is officially known as the Retained EU Law Revocation and Reform Bill, and it aims to repeal or assimilate retained EU law. So currently, in the event of a conflict with domestic law, EU law takes priority over national law, and this principle of supremacy of EU law in the UK will be abolished by the end of 2023. So all retained direct EU legislation, so EU regulations, decisions that had direct effect in the UK before Brexit will be revoked. And this is also the case for EU-derived secondary legislation that didn't have direct effect, such as EU directives. And there is an option to extend the sunset date until the 23rd of June 2026, but this is only in relation to specific instruments or specific legislation. And then just to mention that from the end of 2023, retained EU law that remains in force will instead be known as assimilated law instead of retained law. And in terms of the impact of the courts, so the UK Court of Appeal will no longer be bound by retained EU case law, and the Supreme Court will be given powers to depart from its own retained domestic case law. So in other words, case law that was established before the 31st of December 2020. And just in terms of the status of the bill at the moment, so it was introduced on the 22nd of September 2022. It's undergone the first and second readings in the House of Commons and is currently at the report stage, where I think it will then undergo a third reading before it moves to the Lords. That's just a very quick summary.
Thanks, Jess. That's it on that. We were going to have some questions now, but we have run over. We've had 3 questions from one individual, so I think what we might do is email a response to that one particular individual, so that we can bring this session to a close, because I'm sorry we have overrun by 5 minutes. So thank you very much for listening. Like I said at the beginning, this session is being recorded, and a link to the recording and also the slides will be sent out in due course. And if in the meantime you have any questions, then please feel free to get in touch. But thank you very much.
Thank you.